Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Friday. It's the end of the week, guys. Friday, June 17th, and we've got a long weekend ahead of us. Perhaps when you look at the week's performance for stocks, you might think that you may need a breather, and stocks probably need a breather too. So risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the full risk disclaimer right here. This video is, as always, for education purposes only. Let's go ahead and look at how we finished for the week first, and then we'll kind of dive into some charts in this video. We'll do it very quickly, just to kind of go over the main highlights and just a snapshot to see where we are kind of headed into the week. But yeah, look at this performance for the week. SPY down 6.2%. So one thing to notice before I go through all this performance is look at the top red line here. It's all red. Like there are not a lot of places to hide in this market. Gold, bonds, I keep hearing, which is fine, right? Because there may be a trade there just that I'm not seeing with gold, but gold is going down too, and like half the time, if you look at the chart of gold, the 200-day moving average is flat as a pancake, which just indicates that it's a very sideways trend. So, I hear the talks of gold, but I got to see some performance. I got to see some type of a setup in gold. So that's not a place really that's showing anything, super hot. But look at everything else for the week. Bonds were down another 1.5%. We're going to talk about those, but SPY was down 6.2, diamonds down 5. Small caps did break those lows from May. For a while, they were holding on to that. The Qs actually outperformed a touch when you look at the other ones, which again, how could you say outperformed being down 5% for a week? But it is what it is. Emerging markets, they also outperformed a touch, down 3.6%. So if you were in those, you lost less money, I guess you want to say. Listen, this is a really nasty market that we've been dealing with this year, and I'll get to kind of what I think in terms of how to kind of tackle this market right now, or how I'm tackling, I should say, because I'm not giving any advice or anything like that. So for the week, yeah, performers. Biotech actually was your best. Hey, that's not a bad sign, even though it was negative for the week. Sometimes we do see biotech kind of lead out of things, but again, I think it's just too early. The Chinese internet names, I'm going to talk about them too in just a second, but look at to the right side. Oil and gas names down 20%, right? This is, in my videos this week, and certainly we talked about this in member videos, that I just was really kind of getting a little bit worried about that group. And I just didn't think that that you could hide in energy stocks forever in a bear market. Plus, I've talked a lot about this. So why don't we start there with oil, right? I've talked about how oil, right? Even though with oil and nat gas and all the supply issues, right? If you think that there's going to be, certainly the stocks have been down and they're in a bear market, but if you think like the consumer is going to be weak, right? And I have these conversations with people who are more bearish, right? But they're hiding in energy stocks. And I'm like, well, wait a minute. If that's your view, if you're really bullish on the economy and think it's going to go into a recession, then how could you be bullish energy stocks? Because oil is not going to operate in a vacuum. There's supply and there's demand. Yes, there's supply issues. We know about those. Eventually, and this could take a very long time, but the supply issues are going to fix themselves too. Why? Because people come up with creative workarounds for situations. Now, again, it probably won't be, and it certainly hasn't been overnight. It may not be for weeks, months, but eventually they're going to figure out supply chain issues, right? That's what technology does, and that's what that's what we do as human beings. We come up with solutions, right? So this problem's not going to be forever. So anyway, that's the supply side, right? The demand side. So if you're thinking that we're going to go into a recession, right, then how do you think that that's going to be bullish for oil? right? Because it's like everything else. There's going to be less demand for it, right? As consumers cut back on things. So again, it's important to kind of think about these things, right? And think about what you're doing. Like, oh, I'm going in these energy stocks because because everybody says go long energy stocks and go short tech. Okay, well, eventually there's going to be an issue with, like, it changes, right? The market changes. So big move down in these things. Interesting, crude did not break, or crude kind of closed right around the 50-day moving average, right? So where are we? We're still at a high level. It's 108. I would like to see this actually move down, because I'm not holding any energy stocks right this second. So because of that, and I think it will be good, because to get some of these commodities to move down, right? Perhaps that gets inflation to move down. Right. And if inflation starts to move down, the Fed can possibly back off from their hawkish rhetoric right now. Right. And that could be. But again, these are things that when we talk about these things, you have to have the right perspective for this, right? That doesn't mean like stocks start to rally tomorrow or next week, right? It means, hey, we're in the middle of June, which is a very weak seasonal month. And, I'm looking at the fall, right? And of course, like, I'm not folding up shop and saying, hey, I'm closing up until the fall. We'll continue to monitor and see how things shake out. And of course, do some day trading, right? Which has been really, which has been the thing that's been working the best right now. And really just to kind of sit and monitor for things. And I know it's hard for traders to sit and be patient, but that's what this year has been, right? Adding more positions into this type of a market right now is just has been more problems, right? So we might as well keep going here with the energy stocks. Nat Gas, look at that. We took out a VPOC to the downside, right? That was something that we just missed. It's so funny that the way this happens sometimes, right? Sometimes on these big moves down, we come like within a hair of taking out that VPOC. And then we bounce a little bit, very weak bounce. Got rejected back at the retest of the 50-day moving average, and then the follow through today takes out that VPOC, right? So it's just very interesting and very fast, by the way. As always, what do they call the nat gas commodity? They call it the Widowmaker, because of how fast this thing moves. Okay, and then just to look at a couple of these other commodities, right? Whoops. There we go. Copper's breaking down, right? Copper broke through, just like stocks are doing right now, right? Broke through the May lows, right? So again, this is more of a bearish signal right now. So this is not bullish. 4.05 is the level that we broke. So breaking this big sideways movement, and we'll see if we get further downside movement here, right, in copper again, which is, this is not, again, it's not a bullish signal. This would be more of a bearish signal. All right, and then let's talk about bonds for a minute. All right, so bonds, I tweeted out a couple charts, again, watching bonds very closely, because the bond market affects a lot of things, and it does affect equities. All right, the faster yields go, right, the more damage that you're going to see. And again, we're looking at the long end of the curve, right? When we hear about the Fed and what they did this week, right, that's the short end of the curve. That's the overnight rate called the Fed funds rate, or Fed funds futures, right? So they are still pricing in for the next meeting 70 basis points. Again, we're looking at the short end of the curve. And you could kind of see how this goes from there on after, right? And also you could look at the slope, right? It tends to kind of move a bit more sideways once we do get through that fall. So that could change a lot. I mean, things change very quickly just over the last 10 days in terms of a 50 basis point hike going to a 75. So yes, the long end of the curve is important too. 2 VPOCs taken out. One of the things I said was it would be logical for us to get a bounce. Listen, we got a little bit of a bounce, but we'll just have to see if we get follow through. I also think the weekly candle is very interesting, right? This is a hammer bar. Now, it didn't retake the any type of moving averages, nothing. So a little bit of a bounce from the lows is nice, but we're going to need to see follow through from that. And bonds, in my opinion, are a must watch. What about the US dollar, right? All kinds of central bank meetings this week. Japan met last night. They didn't do anything. The UUP ETF did move up 1% today, which is a decent move for currency, after that big red bar yesterday. So I had a test of the 20-day moving average, but no bounce. By the way, sorry, and I forgot one thing going over nat gas futures. Remember what I talked about? I put this on Twitter, and I talked about this in last week's TTG macro video. Was that this is a bearish? This was a, in my opinion, and not just my opinion, but it is what it is. It was a bearish RSI divergence, right? Here's where the RSI made this high. Every subsequent peak here, which kind of get less and lesser, you did not see the strength in the RSI, right? So that's what's called the divergence using this, right? And that was a little bit of a hint that there was some weakness coming. All right, some people like those divergences. Sometimes price can work those off. Other times it's a sell signal. All right, so let's turn over to equities. We talked about bonds and some commodities. So where are we? Today, things going back to the performance for today, the S&P finished, well, S&P futures finished up. Oh, I guess SPY maybe didn't take an effect because of the dividend today, but it's saying it was down. Maybe the my spreadsheet didn't take into effect for today. Qs finished up for the day, 1.2%. So again, they outperformed a little bit. And I find that a bit interesting. Also, if you want to look at this chart that I've been talking quite a bit about, again, lots of charts, right? But this is one, we've seen this massive outperformance this year. When you look at XOP versus XLK, look at that thing come in. Whew. Right. And one of the things that I said is, maybe we start to see the Qs outperform a little bit, which we did this week. But look at that chart. This is XOP over XLK, right? And again, if you look at the 5-year chart, kind of can see a little bit of a better picture that what we've seen so far is a pretty big retracement. So this relationship is testing the 50-day moving average, right? After this massive outperformance all of 2022. All right, so let's talk about the indices. So, well, we really don't have anything positive to talk about here. We'll make it quick. Price is below all the moving averages: 200, 50, 20, 5. Right? The 5 tells me when the price is below or above that what the short-term trend is, and we're still trending down. We've got VPOT. We've got another. We kind of stopped at this S1, and all this is an extension away from this month's value area. But we're kind of caught in the middle here. We've got a lower VPOC at 35.53. We've got resistance up at 38.89 on the daily. That's no place to be. That's no signal, nothing. So I try to practice what I preach. Sometimes I'm very good at it. Sometimes I stray a little bit away from what I'm trying to preach, because nobody's perfect. But I could tell you I'm very light right now, and in my trading account, I've been that way a couple of times. Every time I've kind of gotten put on a few more, or a couple swing trades, I've gotten stung a couple times with that. So I would rather just let this play out a little bit further, because, and again, I'm not seeing any great signals. So there's no reason to put on positions if you don't have, a really good reason to do that. Here's the 200 period moving average. This is something where I think will be very interesting. If we come down here, right, this is 35.07 on the weekly chart and 3324. So remember this 30, right around 3,500, right? That makes sense to me. And, I don't know what's going to happen when we get there, right? And that would also take out this first VPOC. We could get a second VPOC being taken out too. So this to me is a more logical place where we could see the bottom being put in. Okay. And again, I'm not making a prediction. We'll have to see when we get there. NASDAQ, which was up, again, this is in no man's land, right? 11,684, or let's look at the Qs, because I always get more questions on the Qs. right? So here's where we are for the Qs, right? And we're between the bottom of value, 285.85, versus the downside VPOC, 258.64, right? That's the first one. We don't know if we're going to stop at that one, right? And then the weekly chart, which again, I'm looking a little bit more at, you got the 200 paired moving average. This is where, of course, right around the low of what we saw back in 2020, where this line is sloping. And then there's also that VPOC down there, which lives around 254. So again, right now, kind of caught in the middle. And then the last one that I usually look at very quickly, let's start with the weekly chart because I'm on it. This did break the previous lows. For a while, we were hanging on there, but we broke the range. And, that VPOC at 161, kind of just an inside day for IWM. Here was the previous low. We were holding it for a little bit, right, and showing a little bit of relative strength, but this was kind of the last to break. So either like to see price retake those value areas for the June, or we could chop around for another month and see what we get for July, or we could come and take those lower levels out that I've mentioned in each one of these. All right, so that's how it looks. It does not look great, and that's why, again, I adhere to what I see in the charts, and I don't really have very many positions on. I'm about 95% cash, and I've been that way a couple of times this year. I've been positioned for a couple of times for a bear market rally. One time I did stay a little bit, I stayed a little bit too long in the bear market rally, about a week and a half ago when I was out a little bit. I was out of the office for a couple of days. So let's go through just a couple single name charts. I don't have a lot, but I'll give you where I see a little bit of relative strength. Also a couple names that I'm watching, but might as well just start with this group, the Chinese Internet Group, right? I was on Bloomberg earlier. I talked about how this group is showing relative strength, right, versus what's going on in the US. So what am I looking for? KWeb. All right, so here's just so that you could take a look at how this looks. But that's the outperformance of what we're seeing versus the US. All right, so there you go. Again, you got kind of a base, and you're starting to see, that's actually what is this? The 100-day moving average crossing above this is 50-day. 50-day crossing over the 200-day moving average. Yeah, so that's, I guess, a golden cross there. I think that's what they call it. If not, don't get mad at me, but I'll just leave it at that. You got the 50-day moving average crossing over the 200-day moving average. Again, longer look at China versus US. There you go. That's what that looks like. Again, keep in mind, when we talk about Chinese stocks, right, there is another layer of risk here, right? We're dealing with who knows what happens with China. It's different, right? So you have to kind of think about how to play that. And sometimes even day trading helps. But, we're still underneath the 200-day moving average. I discussed a trade idea on Bloomberg TV earlier, which would basically get you back to the 200, get you back up to here for this ETF. But to go through some of these names. Now, I don't know what happened with BABA today. I think there was a story about that the government is going to approve Ant Financial. And then it was later, then somebody said that they made that story was fake. That's what they call Fugazi. Still finished positive, but was up 10%, right? And it's one of these things too in this market. There was we were talking about this in the trading room earlier, that if you come in and there's a stock that you own that's up 10%, and if you're not taking those profits right now in this market, then I don't know what to tell you, right? Because obviously that's a disappointing move, right? But anything in this market, right, in a bear market, you walk in and your stock's up 10%, right? You have to be ringing the register on some of the trade, right? That's just, it's kind of common sense right now. Even in a bull market, that's a gift, right? To find something up 10%. Again, you have to be owning it if you're not in it. But let's say that you were in the KWeb ETF. It's the same thing, right? Because it's a chunk of that ETF, right? I would be selling into that. Okay. What I continue to like is this PDD, right? It just barely finished up for the day, so it didn't make it over the 200, but again, it's over the these couple moving averages. So I'm watching this one. I traded a little bit of DQ today. Again, just didn't go crazy with things, but this thing took out, I believe it took out, well, maybe it didn't take out this version point of control, but it kind of sat back in here, and I thought that this was a good spot, right? It filled this gap, and it's a name I'll be watching next week. Right, and here's here's what I did today, just so that you could see. Yeah, and a couple of these names I've been playing too. You know, again, they just look. So this is what I want to see out of the U.S. stocks, right? You want to see this kind of thing. You know, a little bit of a base, right? A little bit of a higher low, and then retaking some of these moving averages and starting to kind of move back up, right? And if you look at the shorter time frames, right, XPEV did get out of the value area. So again, what did I do with this trade? I dumped it at the end of the day. Why? Because I don't want this. I don't want the risk right now of swing trading, right? Again, day trading, right? We did this yesterday as well. PDD was I think was a winner for me yesterday, right? Amazon, which I'll get to that chart in just a second. You know, also kind of interesting to me at this point. All right, so that's a couple names. You know, NEO's another one too, which did clear the value area, and is also looking to take this out, this virgin point of control. But again, these things are at least moving in the right direction. And then the other one that I look at is the third one is LI, which is actually the best out of the three in terms of, you know, getting above its 200-day moving average, right? In terms of that technical basis, getting above the 200-day moving average. What else? I think there was one other China name that I was going to talk about too, but I'll move on for now. Couple, names that I'm watching here. Amazon is holding the lows. Now, it doesn't mean it's going to hold, right? We looked at IWM and said, hey, that was interesting. IWM is holding the May lows, right? This has a chance. It has a chance to kind of bounce here, right? And maybe put in its some type of a low. But it's not above the 5-period moving average. It's not above the 20, right? Again, it's just clinging on to the bottom of its value area. So it's a name I'll be watching. Again, I've been trading it, right? Because it's been showing relative strength during the day. For example, when the S&P was a little bit weak today, Amazon didn't give much back today, right? It kind of came right back into the value area and bounced a bit, right? While the market was doing this, right? Had a bigger of a pullback. Right, so I look for hints and clues like that when there's a little bit of market weakness and when other things just kind of they stop going up, right, and they don't crater like the market. I thought Amazon has been doing that for the last couple of days. All right, and then another group that was very strong has been the solar names, but here and there, right? If you look at ENPH, right, and this is what kind of a market that we're in right now. But ENPH, which is my favorite solar name in the US, was down 10% yesterday. Today it was up 9%, right? And again, just very, very difficult. It's very difficult to recover too when you're caught in names that move like this, if you're caught on the wrong side, whether it's long or short. Because if you're long and you walk in and this thing's down 10%, it's a big hit to your P&L. Right? If you walk in and you're short and the stock gaps up, like, is up 9% for the day, that's not easy either. So again, I think right now, the best place to be is a little bit on the sidelines. All right. I think that's it for today's video. Geo is another one too that we've talked about I talked about this one last week, how it was showing relative strength on last Friday. It's actually doing doing pretty well. So we look to see, we want to see more stocks start to participate, and we'll be watching that next week. If you're not a member of Tribeca Trade Group, get involved. Go to tribecatradegroup.com. You could also find that on my Twitter. And you could get involved and you can see what it's like, in terms of the ideas that we're putting out on a daily basis. All right, guys, have a great weekend. And yeah, I'll see you back late towards the end of the weekend.